Thank you for staying with us in the room and hopefully on the call. We'd now like to take you through our evolving data center business. We think it's one of the more exciting and obviously one of the newest areas of focus within ESR. My name is Diarmaid Massey. I'm the CEO of the business. Next to me is my colleague, Dev Gupta, who is the CIO. Normally at this point in the day, 12 o'clock or so in a long day, I'd be saying I'm the only thing keeping you from lunch. Well, sorry guys, don't get your hopes up. If you're in the room, we're not taking a lunch break. Obviously, if you're at home and following along, please get onto your local app and order some food to be delivered. Please put some traffic through your local data centers. The data center business is one with great opportunities regionally. I want to take you through what we're doing in partnership, how we're working with operators and hyperscalers around the region, driving strong growth of the ESR new economy ecosystem. Over the last 2 or so years as a group, we've been evaluating and acquiring property around the region, leveraging the core ESR regional strengths and contacts. I'm going to spend the next few moments talking about what we've achieved over the last few years, and then Dev's going to take you through more detail about why we're doing it and how we're executing. A minute isn't a very long time. Already I've been talking longer than that. But if we take some time to take a minute to look at what happens in an internet minute, you'll see there is significant data creation. That data is transported around the world and it's stored in data centers. Every day, that volume increases. The growth rate is not slowing down in any part of the planet or in any technological sphere. And in fact, with the growth of AI, applications such as ChatGPT and other more resource-intensive applications, it's increasing at exponential rates. Data centers are the core facilities hosting that technology and infrastructure which is building the planet that we are all used to living in. It powers the cloud, it powers the internet. They're central to the web of cables which make up the modern superhighways of data and traffic around Asia. And the market for these facilities has been growing in all the major cities in the region. And it's the core of the cloud, and increasingly we're seeing new growth in markets which previously were not thought to be growth locations, but more secondary and tertiary. And if you just take a minute to look at the chart in front of you, you'll see some sheer ideas of the volumes that we're creating. 230 million emails sent every minute. I think most of them come to me, to be quite honest. 167 million TikToks watched every minute. I can't say I've ever watched TikTok, but lots of people do, clearly. And the more video we watch, the more streaming we have. We're just increasing the volume of traffic, which increases the need for data centers as consumers and businesses require faster and faster access to the world of today. Per market research and our estimates, the current co-location capacity in APAC is around 9 gigawatts, which is about 40% of the global capacity for co-location. And it's expected to grow at a rate of over 13.5% to reach over 20 gigawatts in 2028, so more than a doubling of capacity. Cloud adoption in APAC is still catching up with the Western Hemisphere, and newer technological changes such as 5G, AI, the Internet of Things, as well as just more consumption of video and requirements to have response times closer to the edge and lower latency. They're driving the widening of growth locations. Importantly, the world's largest hyperscalers, and these are the household names we're used to reading and hearing about, the Microsofts, the Amazons, the Googles, the Alibabas, who are a key target segment for ESR. They're expected to grow at a rate exceeding 23% over the next few years. Our group capabilities across the region allow us to offer an unparalleled approach to working with our customers. And you've already heard from many of our colleagues about how they're seeing data centers as a key component of their country growth. And we see that in both existing countries we operate in as well as new ones. Our experience working locally and regionally, refined over many years in logistics development, is highly relevant to our ability to source, permit, design, and ultimately construct and deliver state-of-the-art data centers. Our group access to capital, and our operator-neutral strategy allows us to consider and adopt flexible business solutions which put both our partners and their people at the center of the solutions. As we look to build adjacent businesses to the logistics asset class, both data centers and renewables stand out as a vision that can offer the end users of the future an ESR future, where they can order products online in a service hosted in an ESR data center, fulfilled through logistics from an ESR building, and powered by renewables delivered by ESR. We started strategizing for the DC business in 2020-2021, including detailed demand-supply analysis, as well as looking at the evolving business models and needs of our customers, and more importantly, the value proposition for operators and cloud service providers, as they find it hard, in many cases, to navigate a diverse Asia-Pacific geography, which is our key strength. In the third quarter of last year, we received $1 billion US commitment for the first close of our dedicated APAC DC Fund 1 from 3 of the largest and most sophisticated sovereign and pension wealth funds. As we deploy capital from that fund, we've focused efforts on building a portfolio of seed assets across key cities in APAC, partnered with like-minded, best-in-class and most relevant operating partners for each turnkey project. We've developed strong relationships with the cloud service providers directly for build-to-suit projects and created a dedicated team focused on delivering future-proof digital infrastructure. Our ESG strategy is leading edge, and we are committed to our products to be as carbon neutral and driving renewable consumption as far as possible. By accessing best-in-class technologies and working with external advisors, we aim to deliver more people-centric, planet-friendly solutions around the region. The skill set adjacency of ESR to the data center business allows us to provide for scale and speed, leveraging our existing in-country ESR development teams for land sourcing, permitting, approvals, construction, as well as ongoing evaluation of the ESR logistics portfolio for its suitability for redevelopment into data centers. As we look around the region, there are some significant growth areas for data center gravity. There is ongoing demand in the major Tier 1 and Tier 2 markets such as Tokyo, Osaka, Shanghai, Beijing, Seoul, and Sydney, which you see on the screen. But that combined with rapidly expanding newer markets such as India, Indonesia, and Southeast Asia make the entire Asia-Pacific region attractive for data center development and market expansion. Over the last 2 years, we've acquired well-researched land with power in Osaka, Hong Kong, Navi Mumbai, Seoul, and Tokyo. We've partnered with a global operator, Stack Infrastructure, in a joint venture to bring the Osaka and Seoul assets to the market using our local and regional expertise and their global experience. We are continuing to look for partners for further developments, as well as an ongoing effort to source land and expand the offering. So please stay tuned for more announcements on what we're going to be doing around the region over the next few months. Data centers are core to the infrastructure of the new global economy, but equally they're coming under scrutiny for their impact on the planet. As developers, we have a commitment to our investors, to our stakeholders, to minimize that impact, to try to ensure that we're acting responsibly and delivering solutions which ensure that we're leaving a healthy planet for our children. Not only is this the right thing to do, but happily it's also good for business. Because by minimizing our impact and managing our consumption of raw materials and ethical sourcing, as well as delivering the right returns, it delivers the right result for the planet. As a business unit and as part of the wider ESR group commitments on ESG, we endeavor to be thought leaders in this area and continue to look for ways to differentiate and drive innovation. And on that, I'd like to hand over to Dev.
Thanks, Dermot. Some more of what Dermot mentioned, a little bit about the adjacencies of our core business, which is logistics, and the why and the how of what we're doing right now. So when I was the employee number one for data centers over 3.5 years ago, and I was asked to write about the strategy. We thought about the why and the opportunity set that the data center business presents. And if you think about it, it's not very different from logistics. A lot of throughput of material, whether it's SKUs that you buy on a daily basis or it's the data that you consume on a daily basis. And if you see the chart on the top left, you're seeing the amount of activity, which used to be about 2 million gigabytes per second, is growing to about 150 million gigabytes per second. That's the amount of data that passes through the fiber every day, or every second rather. The second is on your right, you see the data mass creation, which is essentially the number of SKUs that pass through our warehouses, the millions and billions of things that you all consume on a daily basis. From 60 trillion gigabytes in 2020, moving to almost 180 trillion gigabytes by 2025. Actually, it probably will cross that number by a handsome amount, given the growth already. The third thing is, again, from a consumption standpoint, you order something on Amazon and you want it within 4 or 6 hours. So that we translate in data terms as latency. How quickly does your website come when you ping something on your phone or on your laptop? Latency required, edge required, closer to consumption, points of consumption is another big deal, which essentially we feel will grow from about 1,000 megawatts right now to about 80,000 megawatts over the next few years. This is a highly untapped market. And I would like to say that our 400 existing logistics facilities, many of them are well poised to take advantage of that. Just looking at the size and what it means, what do these trends mean from a perspective of the size of the market? Video consumption has been a key driver. Data sovereignty has been a key driver, and I would say a movement from legacy systems to cloud systems have been a key driver. The current market globally is about 22 gigawatts, is expected to grow to 50 gigawatts by 2028. Asia Pacific is about 40% of that market. What this translates to in terms of opportunity set for us is about $200 billion at least of CapEx on new data centers every year. So the projection is that from 2022 to 2028, about $1.6 trillion of new data center CapEx will be made. And if you assume that 40% of that continues to be APAC, that's about $600+ billion of new money that would be spent over the next 5-6 years. We just heard that two large hyperscalers have taken 720 megawatts of capacity, just 2 buildings in Europe. So that is the scale of the newer developments happening in the world, and we think Asia is not going to be far behind. The question is, how does ESR take advantage of this stunning growth? Basically, what we are trying to achieve is a plug-and-play philosophy, a comprehensive solution where we provide well-researched land that comes with power, fiber, test fits are done, single points of failures analysis has been achieved, and we provide the development management capability through our country teams so that it becomes a plug-and-play for either an operator or a hyperscaler, depending on what model they would like. The other axis, I would say, is the flexibility of our service models, right? Ranging from being able to provide a powered shell to a fully fitted asset where you provide the mechanical, electrical equipment, to a turnkey solution where you operate for the customer and all they're doing is putting their servers in and being able to provide services to their end users. The other aspect is flexibility of business model from a speculative build to a build to suit and anything in the middle for our customers. And finally, offering it across Asia Pacific, which we feel is a very big deal. And we don't really see any operator or developer having gone out of their home markets and being successful across Asia Pacific, across 12 or 13 countries. I'm sorry, we would not be able to show you any videos. We will never be able to show any videos because data centers are always unmarked buildings. But what we're trying to show here is a general trend of growth of our business. As things stand over a 5-year period, the way things stand right now, we're in the process of developing about 560 megawatts of data centers across Asia Pacific. So our AUM will definitely grow at about 2.5 times. The GFA will also grow at 2.5 times. Build capacity in terms of megawatts is likely to go at about 3.5 times. The bar that you see on the bottom left is the 100 megawatts of assets that we currently own and operate. You heard Jihoon and Thomas earlier. There's a data center in Korea. There are 2 in Singapore. There is 1 in Japan. So we've learned from our existing assets on how to do conversions of warehouses, and we're now using that in a big way to develop greenfield, and that's the bar on the right. So that's going to be the 500-600 megawatts. Just in summary, as I mentioned, we are currently developing 6 assets under construction. We have a pipeline of another 5 that would probably total to more like 700 megawatts if we included everything. So that's one of our key priorities, definitely. We're also enhancing our sales pipeline, so going through the customer base, not just in Asia Pacific, but in headquarters in Seattle or the West Coast. We're adding new development sites, and our focus will continue to be Tokyo, Seoul, Southeast Asia, and Mumbai because we see exponential growth in those markets. We continue to evaluate regional assets and capital partners for a green fund, for a evergreen DC fund, because we think there's a lot of demand, and there isn't a consolidator because you have lots of single assets developed by individual developers that need a long-term home, and they would need capital recycling. Of course, the aim is to close the fund as soon as possible with the hard cap that we have. We already have achieved more than 2/3, so it should be over the next couple of quarters. And finally, I would say build thought leadership. I was in a conference last couple of days, and we talk of 8 or 10 kilowatt racks. They talk 200 kilowatt racks because that's what AI requires if you really want to train AI and if you want to draw inferences. So thought leadership in terms of cooling, whether it's immersive cooling or liquid cooling, thought leadership in terms of on-site hydrogen power, 24/7 green energy that you can store at the data center site so that you can use it at will. I think those would be the key differentiators. And we think as a large land buyer and a developer, we're very, very well poised to achieve most of those requirements. Thank you. Open for question and answers.
Thank you, Dermot and Dev. Yeah, quite a few questions coming in, so quite busy trying to see how we can do the questions in a more efficient manner. Okay, I think the first one, what is driving growth in hyperscaler DCs specifically?
Okay. So hyperscaler DCs essentially are people who have two types of workloads. One is end user demand, which could be a pharmaceutical company, auto company, banks, insurance companies. I mean, they have massive workloads. And 2 hyperscalers like Azure, Microsoft, and Google have their own applications. So if you use Outlook, if you use Gmail, or Google Photos, those are native applications of those hyperscalers, and both have very, very significant demand. Now, the third piece, which again, we should talk about and probably will end up being 40–50% of the growth, is the artificial intelligence. ChatGPT, OpenAI has partnered with Microsoft. Google has its own platform called Bard, based on Palm 2, and we feel that those are transformative in terms of what our industry will need to provide to them. So add all of that, that's a massive growth opportunity.
Okay, thank you. The second question is in relation to ESG. Are data centers helping their customers achieve ESG goals?
Sure. Let me take that. Well, I mean, data centers come under scrutiny for their impact on the environment, and there's no doubt about that. As we build out the infrastructure, there is certainly a requirement on us to ensure that we're delivering highly efficient sites. But equally as much, there are a large number of older developed sites around the planet which really are not very environmentally friendly or even capable of becoming so. So developing new sites today and moving workloads and servers from older sites really does help people improve the impact on the planet of these facilities. I mean, they're a requirement. They're never going to go away. So it is beholden on us to deliver the most environmentally friendly version of them that we can. And the newer development sites really are a step forward over sites that were delivered 20 years ago. Power consumptions have increased significantly now. Older sites weren't designed for that. Cooling technology has improved significantly. And equally as much, we've learned a lot more about where these sites need to be located. But to be fair, each of us has a role to play in this. We all keep a lot of junk in the cloud, whether it's our photos, whether it's our social media profile. We might be living a green lifestyle and recycling our rubbish very well, but we don't recycle our photos, we don't recycle our old emails. They create storage in the cloud. Actually, we can all play a bit by deleting old stuff. That's good for your ESG requirements as well.
Very true. Something for all of us to remember. I think we'll have time for maybe another 2 questions, given that, there's quite a fair bit.
There's a lot of questions.
Everyone's interested in DC. Okay, the third question would be, how do we compare with early movers in this area? For example, PAG or specialized players like Equinix? And when can we expect the next fund after DC one is closed?
Let me take the first bit, you take the second bit.
Sure.
How does that work?
Yep.
Yeah. Well, I'll first start off by saying that we're not an operator, so we don't really compare with the Equinixes of this world. Equally as much, we see an opportunity to develop a strategy which is operator neutral, partner neutral, to enable operators or hyperscalers or any users of data centers to move into new markets around the region, leveraging the ESR skill set. Our skill set, as we said earlier, is about finding land, permitting, having local presence on the ground, and constructing and delivering solutions. That's slightly different from some of the other names mentioned in the question. And I think we'll continue to leverage those and continue to deliver solutions for our partners and our customers.
Yeah, I think a theoretical question on DC2. So first of all, very, very delighted that 5 of the largest institutional investors in the world are part of the fund. The fact is that if we were to think about a $12 or $13 million per megawatt build, and as we mentioned, about 500 megawatts at least under construction, we are already, at the tail end of commitments of Fund 1. So we should obviously, have to think about a subsequent vehicle soon. Yeah.
Okay, thank you. And the last question relates to how will generative AI change demand for data centers? And is there a risk of obsolescence for older DC builds?
So you don't get to ask this question. I take an hour on this one.
That's why you shouldn't answer it.
So, of course, generative AI is transformative for data center demand. There's a company called QScale as an example in Quebec. They started about 18 months ago, started building a 150 megawatt data center completely speculatively, only for generative AI, only for teaching and training large language models, and they're fully leased out even before they completed construction. So that is the transformativeness of generative AI. Now, it does require us to think differently. Floor loadings would have to be very different. Floor to ceiling heights will have to be very different. The way we think about cooling and power will have to be very different. So that's upon us to make the opportunity work. Is there a risk of obsolescence? Yes and no. The fact that you need less space to do a lot more computing is a fact. But the demand for computing is growing so much faster that you still need a lot more space, because there is a limit on how much heat you can evacuate from the heat that gets generated on the chip, because it's doing AI, it's doing very, very hard work, and therefore you need to intrinsically make the data centers larger for AI to exist.
Great. Thank you very much, gentlemen.
Thank you.
Thank you.
Thank you all. Thank you.